key to this project is how to deliver a more affordable type of rental housing for people who may be struggling to keep a roof over their head. They may not qualify for social housing and they may not be able to afford to buy a home of their own at this point in time. More and more people are relying on the private rental sector. More and more people are living there. So we need to look at different ways that we can provide housing to meet different income thresholds for different household types.
Hello, good morning everybody and welcome to the session on housing affordability options. As Donald said, we have three excellent speakers this morning, starting with John O'Connor from the Housing Agency, then Sorcha Edwards from Housing Europe and James Benson from the Construction Industry Federation. The format of this morning is that each speaker will speak for about 8 to 10 minutes. I'm going to give a 1 minute warning towards the end of that, so that we try and keep to time and allow sufficient time really for questions and answers at the end to get some discussion and debate, hopefully. And that's about it. I'll give you a little announcement at the end just to remind you what to do for this afternoon, just for logging on. And I think we're going to kick off. I'll just introduce John just to give you a little bit of his bio, which I think you've probably seen in the conference pack anyway. And I'm sure John is very familiar to everybody who's here this morning. John is Chief Executive of the Housing Agency, which is a government agency that supports, provides services to local authorities, to approved housing bodies and the department. He was previously the CEO of the Affordable Homes Partnership and Executive Manager in the Housing and Communities Department of Dublin City Council. He's got a very interesting presentation this morning, and the title of it is Affordable and Cost Rental. Thanks, John. I'll hand over to you now.
Thank you much, Sharon. Good morning, ladies and gentlemen. I'd like to thank the ICSH for the invitation to speak here this morning. As Sharon said, I'm going to speak regarding affordable housing and specifically in relation to cost rental housing. And I'm going to also just talk about black swans and grey rhinos in the presentation. So starting with the black swan. And you know, what is a black swan event? COVID-19 is a classic black swan event. It's an extremely rare event which causes severe damage. And it's an event that focuses to reevaluate what we are doing and forces change. And we see that now with COVID-19, not only the immediate effects and the immediate change, but also long-term, the long-term change that happened to society in many ways. I'd ask you a question is whether we have now got 3 black swan events happening at the same time, which is very unusual. We have COVID-19, we have Brexit, we have a global recession going to happen, and the fourth one maybe is climate change, which is a grey rhino event, which we'll come to later. The reason why I raise this in terms of the approved housing body sector and the local authorities, it's a huge challenge. The challenges in terms of meeting housing needs, both in relation to social housing support, but also supporting, you know, a wider group of households and individuals. So there's major challenges facing both the approved housing bodies and local authorities, and it's important that we all step up to meet and address those challenges and do whatever we can to face the environment that we're working in. The programme for government, which is now being implemented by the new government, includes elements in relation to affordable housing. There are 2 aspects to it: affordable purchase housing, shared equity, which Minister Darragh O'Brien spoke about yesterday, and there's cost rental housing. They're the 2 primary elements of the affordable housing proposals in the programme for government. and the Minister is due to announce in the autumn an overall affordable housing plan. As I say, there's more detail in the programme for government in terms of both affordable purchase housing and in relation to cost rental housing. And cost rental housing is the area that I'll focus on, particularly this morning. One thing I just want to say very importantly in relation to affordable housing, and I'd like just everybody listening here this morning to understand, is when you look at affordable housing, that's whether it's for rent or for purchase, you must consider, one, the cost at the point of entry. So how much of a household's income is being used towards the housing costs at that point. And we often talk about figures of 30% of median income as being a level that somebody can afford. Now that is fine at the point of entry, but long term you want the housing cost to reduce. You want it to be reducing down to 25%, 20%, 15% of households' income in relation to paying that on their overall housing costs. And it's the long-term cost that a lot of people designing affordable housing or thinking about affordable housing miss. So it's not just the point of entry. You must think of it long term, and it's just something just point out, both in relation to affordable purchase housing, but also cost rental housing. And it's all about what people can afford, based on the housing costs and based on their income. And affordable housing sits in between social housing, where a lot of support is needed, and market housing, where people can afford to rent or buy on the market. I'm just going to very briefly mention affordable purchase housing. The method of bringing that in is by way of shared equity, and it's legislated for in the 2009 Housing Act. What I want to move on to now is grey rhinos and grey rhino events. Climate change is a classic grey rhino event, and it's the biggest threat facing us in terms of the future of our civilization. So it's a classic grey rhino event. So what is a grey rhino event? It's a highly probable event, but neglected threat. It's not a random surprise. We all know about it. A grey rhino occurs after a series of warnings and visible evidence. So we have evidence, we have the warnings, but often we're not doing anything about it, or we're not doing sufficient about it. So climate change is a classic one. What I'm going to ask in relation to cost rental housing, and is the delivery of cost rental housing by the approved and by local authorities a grey rhino event? We all know, that we need to be supporting that middle income group with more affordable rental homes. And it's an area that I think, particularly the approved housing body sector, they know they need to do something about it, but they must act and step up to the challenge. So both having social housing and cost rental housing. The picture of the rhino maybe might symbolize the attitude maybe by the sector at the moment, but needs to be much more enthusiastic in relation to delivering cost rental housing and getting heavily involved in that area. I'm going to have just two more slides actually to cover, and I want to just talk about cost rental housing, just so that we all have a general understanding of cost rental housing. Cost rental is where rent is based on the cost of provision and the maintenance and management of homes, be it houses and apartments. So the rent is based on your costs. The rents relative to income can normally reduce over time. As you pay off your debt, and those costs are not increasing. And as it matures, maturation, debts are paid off. You can deliver rental housing that is affordable and meets those needs of those middle income households. It is something that you need to do on a long term. This is not a quick fix. This needs to be 10, 20, 30, 40, 50 years. It's a long term investment that's needed in cost rental housing. What kind of measures are used to provide affordable rental in different countries? One is the provision of low cost lands. So, ensuring that the lands is at a low cost or at no cost, is important, maybe an important measure in terms of helping to make cost rental housing affordable. Grants towards infrastructure, so often roads and drainage and that are supported. The third point, and a really important point, is the availability of long-term, low-cost finance. So getting long-term investment in the sector at low cost, that's probably the most important thing in terms of helping to make cost rental housing work and make it affordable. And the other measure that's used in many countries is the provision of secondary loans on favourable repayments and interest rate terms, and that can very effectively be used to have cost rental rents that are affordable, from day one. And it's used in many countries. We talk about Austria, as one country that uses this secondary lending. But also countries like the USA provide a lot of these secondary loans to provide cost rental housing that is affordable. The other thing I'd say about cost rental housing, that we need to understand, it's not about taking an approach to provide market rental housing at a lower cost. So if you approach it, said, well, actually, we're going to deliver it and manage it the same way as we do market rental housing, and we try and have the rents lower, that isn't the way to do it. Yes, you need the rents lower, but the whole mindset needs to be different. It's more of an ownership model, where residents see it as their long-term home, that they look after the properties, that they look after the maintenance, the internal maintenance of those properties. They furnish the properties, and in terms that they put a lot into, like it as if their own home, not only their home, but even the overall development that they're working in. So it's important to understand that, not just assume what's done in other countries. In Austria and Vienna, there's lots of other measures that are taken to make it work and to keep rents down, and you need to understand those. So don't think of it as market rental at a lower cost. You need to think a totally different approach to it. And then the final slide, and Sean O'Connor yesterday spoke about this development in Stepaside in Dublin, in Dunleary. It's a development of 155 homes, 105 are social rental homes, and 50 cost rental homes being developed by Tua Housing Association and a Respond Housing Association. The planning and design of developments was very much done by Dunleary Rathdown, who are providing the land along with the housing agency. And maybe it's the first of the kind of new cost rental proposals being brought through. That's a very advanced stage. Very importantly, and it was mentioned by Robert Grundy from Savills there yesterday, we have in place significant covenants on the land to ensure that the housing is retained as social housing and as cost rental housing long term. When I say long term, we're talking about 150 years. We're not, and it's very important in terms of when we utilize state lands or public lands, that we put in those controls that the land is used long term for affordable housing or social housing. So that's just one other aspect just want to highlight. So I've given you a very quick overview, but I would ask both the approved housing body sector and the local authority sector to embrace cost rental and to start getting involved in it in a very significant way. Thank you very much.
Okay, thanks, John. That was, I guess, thought-provoking, and also puts a bit of a challenge up to the approved housing bodies and the local authorities, really, to grasp the nettle. I'm sure there should be some decent questions and debates in relation to that. I think what we're going to do now is move on to our next speaker, and I guess we're going to go from the national perspective to the European perspective with Sorcha Edwards, who's the General Secretary of Housing Europe, and that's a European Federation of Public, Cooperative and Social Housing organisations across Europe. And they share a vision which provides access to decent and affordable housing for all communities, which are socially, economically and environmentally sustainable, and where everyone is enabled to reach their full potential. So I think this is going to be a nice move from Ireland to a European perspective. I'll hand you over to Sorcha. Thank you.
Thank you very much, and thanks for the invitation. Everything working fine? You can hear and see me, great. I think my immediate reaction to the previous speaker is it's a no-brainer. The role of the limited profit sector to address housing need and not to be limited is one that has been taken in most member states across Europe for a very long period, and in some cases up to 100 years. So I would say it's an absolute no-brainer, and with the right regulatory and financing structure in place, it can be affordable not only for the people living there, but in the long term it can be also the most affordable way for the public finances to proceed. Yes, so thank you very much. I wanted just to give you a little taste of where we are at European level on this question, and also to respond a little bit more to the proposal on the table that John O'Connor has presented. I'm pleased to say that we have quite a few positive developments at EU level in terms of having a scenario, a EU policy scenario which actually really supports the limited profit and the social public cooperative housing sector. And what we have on the table at the moment is an own initiative report from the European Parliament, which we worked very closely on with the Member of European Parliament, Kim van Sparentak from the Netherlands. And I think at last what we're going to get is a more, let's say, coherent approach from Brussels when it comes to addressing the housing crisis, and when it comes to giving the freedom to member states to do so according to their own local context. And obviously we're working very closely on that with the Irish Council for Social Housing, with Donald McManus being the chair of our committee on finance and economic affairs, which is working very closely with the European Commission on competition rules and state aid rules, which obviously have a real impact on the sector. So I'm going to go quickly through what's on the table. So Kim van Sparentak has outlined 7 goals that we should work towards. The first 2, I will go in one go there. A European goal of eradicating, can you see that? Homelessness. Eradicating homelessness by 2030. Then the second goal in her report, fighting evictions and create inclusive housing market for all in Europe. I think the fact that this is so strongly on the table at European level at this point is no coincidence. I think the extent of the housing crisis, the extent of overburden on households, and the extent of growing homelessness, growing housing exclusion has meant that it has become impossible to avoid also at this level. We have been documenting in the State of Housing report that we produce every 2 years the extent of the issues around housing exclusion. And we can see now, tracking the impact of the current COVID-19 crisis, and the latest studies from Eurofound suggests that 8.1% of Europeans have not been able to, have had difficulty covering their rent or their mortgage in the last 3 months. 1 in 5 unemployed people are worried about losing their home, and 6% of those covered in the survey say that they may possibly have to leave their home in the next 6 months. So we are dealing with a situation where at last the reality has also hit home here at European level. And as a result, the European Parliament has really mobilized on that. So they are calling for this, the goal of eradicating homelessness and fighting evictions. And I think on this point, we have a number of ways to proceed. Obviously, we are seeing huge support for the Housing First approach, and obviously so addressing existing street homelessness, and obviously the role of social housing providers, social limited and cooperative housing providers is very clear there. But and again, this needs to be in with full partnership with local authorities, with the full backing of integrated wraparound social services. So it's not something we're taking on alone, but it's something we see a real role, somewhere where we see a real role for the sector. We also have to recognise, however, and we've seen many members of the European Parliament push for recognition on the causes of homelessness as well. So I've just heard a recent study from Dublin saying approximately 80% of homelessness is due to non-payment of rent. And yesterday, even latest statistics from the Barcelona regions, 90% of evictions are caused by non-payment of rent. So we obviously see that while Housing First is a very useful tool for addressing those already experiencing street homelessness, we need a much more complex approach when it comes to addressing the drivers of homelessness, and one of which is clearly evictions and the economic causes behind it. And what we see there is we are seeing pushes from all over Europe, from different local authorities, from national and city administrations, pushing regulation on the private market. We're seeing more efforts to regulate rent on the private market. We're seeing obligatory percentages of new development to be dedicated to social housing, becoming the norm in many cities, even though where it was not the case before. And more awareness of the lack or the less than adequate performance of the private rental private rental sector. So recent studies based on the Decent Home Standards in the UK show that the social housing sector is actually outperforming the private rental sector. So we're seeing increased awareness on the need to tackle the affordability crisis in a more holistic fashion, and obviously they are the most politically contentious moves that can be made. And the conclusion that we draw here at Housing Europe is that a clear part of this puzzle to tackle the affordability issues, alongside efforts to improve the performance of the private rental sector, is to increase the proportion, increase the role of the limited profit sector, whether that be community-led housing associations, social housing providers, public housing providers, cooperative housing providers. The time is now to foster their development to meet the needs of our society. And at the same time, look at the broader performance of the housing market. What we clearly see at Housing Europe is that we have very different starting points for this. And I think Ireland is in a very fortunate place in a way, is that you have a lot of data and a lot of reference coming through. So from other member states who have introduced cost rental or affordable housing for not such a residual group for over 100 years. So we have a lot of data to use. And I would say I would definitely support the reference of the housing agencies, the reference to Austria, so the limited profit housing providers that have been indeed working effectively for over 100 years. But I would also encourage to refer to the Danish market and the Finnish, and to look at how they have rolled out cost rental models, and to note that this is not done in a homogeneous fashion. And I think, as very well stressed by John, it is supported by an holistic approach across the board. One point I would like to stress is that mistakes that a blanket approach to defining affordability, and to learn also from mistakes that have been made in other countries. So, for instance, to focus on a single income ceiling across cities and regions is something that needs to be corrected. We've seen that mistake made in the Netherlands, for instance. So the same income ceiling when it comes to access to housing being applied in Amsterdam, Rotterdam, but also in rural areas. I would encourage, for instance, not to have the same income ceiling in Kildare as in Dublin. And this, again, we are very happy to share a different benchmarking system. Scotland has introduced a very interesting benchmarking system to define affordability according to the local needs and the local context, which we'll be very happy to share more information with Irish Council of Social Housing and with the Housing Agency. We indeed have started an initiative called Housing 2030 with the UN Habitat and UN ECE, indeed to ensure that we have a more nuanced answer to the global problem that is the housing affordability question, and not to simply have a blanket universal truth approach when it comes to solving this issue. And we're very happy also to share those findings. That is, I've covered already the third demand, let's say, from Kim van Sparentak. So increase Europe's affordable housing stock. And obviously we are in touch with Kim, and she's very much in line with the clear role that our sector has to play for that. I realize I've gone 2 minutes over time. I'm going to run through the last 3 points. So devise an integrated European strategy on housing. This, again, working very closely with Irish Council of Social Housing and Donal on that. So we see quite a lot of contradictions. So we see competition rules, state aid rules that are limiting the capacity of local authorities to really intervene when it comes to targeting a variety of income groups, and to ensure mixed communities. So we are working together with cities. They're very strong on this, to remove any legal doubt at European level, and to ensure that local authorities can intervene according to their needs on the ground. So this is it's an issue that's been ongoing for some time, but the reference to social housing being exclusively to be made available exclusively for disadvantaged groups, it does indeed cause some legal uncertainty for local authorities, and we are working together with the cities here at European level to remove that legal uncertainty, so that there are no excuses basically for us to move forward on this. Last, let's see, 5th point, prioritize European Green Deal. I think this also comes into the whole affordability issue. What we've heard from our many of our members is that if they have to meet both their environmental obligations and their social obligations, even those with very, very stable housing financing systems, some of them risk really being put out of sync by those double obligations. So we are working on a variety of different measures here. So we're promoting industrialization of the renovation process, and of course of the new construction process, and looking at ways that we can work together with the construction sector, really, that they're coming up next, to really bring down the cost of the delivery of both renovation and new construction through industrialization. And we see that the cost per unit of a pre-constructed facade is still up to 100,000 euros per unit. So there's still work to be done to bring down that price, but we see that has to be part of the puzzle for the renovation wave. As we see, as the renovation rates go up, stress on labor force is also going to go up. So this industrialization has to be part of the puzzle, both for new construction and renovation. But also a big part of that is having the right subsidy structure on the table. And Your Housing Europe is working to make sure a biggest part of possible of the 750 billion recovery package that is on the table at European level goes to a fair renovation wave. And what we are arguing is that social housing sector are the ones that can pull off a fair renovation wave, because we bring together the community, investment and the environment investment. So social progress and environmental progress in integrated into single projects. We have also, Kim has put on the table, adapt European rules for digital platforms. And this, I think, brings me back to the first point I made, that we also have to be working, reining in a way, the private regulation on the private sector, because otherwise our work will just be, no matter how much we increase the rate of construction, our work will not be making an impact if we don't also rein in the other side of this puzzle. We see some progress there. Paris has managed to win a case last week saying that cities must prioritize affordable housing and have permission to oblige homeowners to have an authorization to rent out their home on a short-term rental platform. And last point, combat housing discrimination. Last point I got to. So, and there we see again a leading role to play. The inspiring video we saw as a kickoff to this session today, looking at how housing providers are working to make sure people with disabilities play a full part in their community. And this, we hear inspiring stories from all over Europe on how we can do that. And I think we have to stress the role we play there as well. Thank you very much. Sorry for going over time.
Okay, thanks, Sorcha. I was trying to get in there, but for some reason I think I was muted. Even I was trying to unmute. But anyway, thanks, Sorcha. That was you covered quite a lot there. And again, I think some of the points you're making about sort of income ceilings relate closely to what John was talking about, and even just, I think, that reminder that the number of evictions we're seeing across Europe, and I'm sure here, are the root of it is quite often affordability, you know, rather than complex needs or antisocial. So that I think that's a good reminder, and a good link to the topic of affordability. Thanks, Sorcha. And just to draw people's attention, there's quite a few questions coming in on the Q&A, so I hope we'll have at least half an hour for those for our various speakers. So if our speakers want to have a look, our panelists want to have a look at those questions, and we'll be ready to go live with those after our final speaker. Thanks, Sorcha. Just to move on now to our final speaker, it's James Benson. He's the Director of Housing Planning and Development in the Construction Industry Federation. He's a qualified engineer and quantity surveyor, and he spent several years in his professional surveying career working with building contractors and specialising in the field of passive fire protection, which we're all very familiar with from our various problem developments, I guess, that we've had in Ireland. And James works in the CIF, where he offers support and advice to members, liaises with local authorities, and has expertise in relation to building regulations and planning services for members. So I'll hand you over to James. Thank you.
Thanks very much, Sharon. I might just do a quick check, make sure everyone can see the screen and hear me okay. Great, okay, thanks very much. And thanks very much for the introduction and the invitation. Just to be clear, none of those passive fire protection projects in question were anything to do with ourselves or at the time, thankfully. Again, just thanks for the invitation. I think I just want to say at the outset, compliments to the organisers today for the quality of what we've seen yesterday and today so far. So some excellent speakers and some very interesting topics and some very important subject matter covered off, and to do so during the current challenging climate is quite difficult. So compliments on that, and even on the remarks that Sorcha made there on the opening video. It's very welcome to see. I think a reiterator for me when you see the number of times homes was mentioned there during that audio clip. To hear houses and units, it doesn't really embody the message I think that everyone is trying to get across. Homes is really where it's at, and that was reinforced in that video, together with communities and support and resilience. So to move on with our own presentation, and I will come in timely because I think it'll be important, and I know a lot of people will want to ask questions, and that's probably where we get a lot of the discussions from today. I do represent the Irish Home Builders Association. That is an arm of the Construction Industry Federation. Our own members represent probably 90% of housing delivery depending on which model in any given year. I would like today to take the opportunity to probably contextualise some of the issues that we're dealing with. John and Sorcha have gone through maybe some of the aspirations and the different associations, approved housing bodies, and some of the models that can be utilised. I think it would be important to contextualise where we are in today's market and what we've seen over the last number of years. So I will look at residential delivery, affordability versus housing affordability versus affordability, cost of delivery, and some recommendations that we would also be calling for in next week's budget. So to kick off, as I said, to contextualise where we actually are, and it has been a difficult year, but we need to look back on where we were over the last number of years. And the housing delivery process, it is very complex, and we've moved on quite significantly from where we were a number of years back. We have main key issues such as planning, finance, land, policy and regulations, and utilities. So we aren't in the same places where we were. Bricks and mortar were mentioned earlier on. The bricks and mortar element of any housing delivery at the moment is probably the simplest part. It's everything that goes around that in being able to get to that bricks and mortar stage and being able to deliver a home then to someone on the back end, whether it be through private, social or rental. To look back where we were over the last number of years, we've come a long way, not far enough, but we have come a long way since early 2014. Over the years, we saw a steady increase in output across all tenure types in those 5 to 6 years alone. However, I suppose that doesn't give the full story. Even within that, we've seen that the level of increase has declined. So we've seen an increase in numbers from 5,500 right up to 21,000, but the rate of that increase has been declining over the last number of years. Similarly to, as John said earlier on, the sort of grey rhino, black swan analogy, we've seen a number of events that have impacted significantly on the market and the industry in the last year alone. I suppose we've had Brexit ongoing, and we've seen the impact of that has yet to be felt, I would say. We've had a general election where housing was one of the top 2 key issues on that, and that election was only 9 months ago at this point in time. We have a global pandemic that we're trying to all deal with and work alongside. And we have our ongoing domestic challenges that we've seen over the last number of years: planning guidelines, density requirements, affordability and supply, and cost of delivery being focused key areas that we need to be looking at as we look at our own domestic challenges. So to contextualise where we are and where we're likely to go in 2020, and I do apologise, I've lifted straight off a lot of the information today from a recent report that we had done in conjunction with EY DKM, putting housing affordability at the heart of the housing system. And the reason we've done so is because we wanted a report that really got to the root and branch review of some of the issues that face the industry, and was a comprehensive study of all areas of the residential sector and the wider construction industry. And it's something that hasn't been done. And that got down into a forensic review of everything and all elements of housing delivery through various tenure types and various models. And importantly, put forward a number of practical solutions that could be seen in the next number of years. So to look closely, where are we going to go at the end of 2020? We will see a drop from 2019, which had topped out at 21,200 units across a number of tenure types. We're likely to see less than 17,000 homes delivered this year. That's probably going to be broken down approximately just over 5,500 social homes through the various streams. Owner-occupier less than 5,000, and that's a level we haven't seen since the 1970s. So that's the only similarity we see in the delivery, a very complex delivery model that has changed, but our numbers are still the same as what we had 50 years ago, quite surprisingly. One-off units will remain at about 3,500. That hasn't varied much from last year. And PRS, majority of which would have been apartments in the probably in the Dublin centric due to viability issues. On the question of affordable versus affordability, I don't need to explain it to anyone on today. It's quite simple. What it is important to note that I think I would welcome the new government's understanding, and the Minister himself has clearly expressed a desire, I suppose an appreciation first off the difference between affordable homes and housing affordability, and there is quite an intricate difference there. but what quite welcomed, I think, the government and the minister's own desire to try and improve and introduce measures that will tackle housing affordability and affordable housing on both fronts. And he's made that quite clear, and the programme for government sets out some of the aspirations and quite clearly sets out that tackling housing supply and affordability will need to be done by a number of stakeholders, from the private industry and our own members working with the approved housing bodies, the housing agencies, and everyone to actually deliver more affordable homes, social homes and owner-occupier homes. Very quickly to look at the cost of delivery, because it is a major element of what will be ultimately affect housing affordability or affordable homes. And there's a number of details up there that were included in the recent report, putting affordability at the heart of the housing system. I won't focus today on those particular elements. It might well come up in the discussion, and I would welcome it to come up in the discussion. It is important that we compare like for like when we look at the costs of delivery, depending on which model might be utilised. So I think an important element is, are we comparing like for like with all elements? All elements do need to be taken into account. It depends on what degree they come into the different delivery model. And it is very much a case of point in time. Do you enter into a project where the land and planning permission has been provided, which will ultimately allow a more efficient delivery model, but that cost will still remain, but it needs to be accounted for in some respects. But I think when we look at, we need to remember, I suppose, the economic benefits of the residential sector and housing delivery for our wider society. If we look for every 1,000 homes, we're looking at approximately 115 million revenues to the exchequer, and that's a return that you won't see in some of the other sectors, and vital, I think, as we look to try and recover from COVID-19. Again, if you look at wider construction, for every 1 million invested, you're going to see 1.85 million in exchequer returns, together with 12 full-time employment jobs, and that's through direct, indirect and induced employment. And they're all key areas in sustainable and recovery and the resilience that we're going to need if we're going to come out of COVID-19 and progress along on housing affordability and supply. Key areas of focus, again, I suppose it's quite clear we need up on 36,000 homes across all tenure types annually for the next 2 decades if we're going to progress out of the housing crisis that we are in, and as I said earlier on, was to the fore of the recent election. Our own members make up representation, those who will deliver 1 to 2 homes in any given year, right up to the larger PLCs who will deliver thousands of homes. Each of those and many of our regional and national members will all work together with the approved housing bodies to deliver, whether it be social turnkey projects, working with the housing bodies, working with the housing agency. I think we saw great collaboration during COVID-19 when we were able to see the essential services list there for a number of social projects that were able to get up and running and continue on some of the vital work and delivery that they did during COVID. And I think on that point, I think the residential sector and the wider construction industry has performed impeccably since the reintroduction in phase 1. In fact, we've only seen 53 cases of COVID, quite off topic, but we've only seen 53 cases of COVID in respect of over 1,100 different development sites, over 220,000 people operating over the last 7 months. So I don't think there is any other sector that has represented itself as well. And I think that goes out to the hard efforts of everyone that's attending today, and the organisers and anyone involved in the construction industry. I think a key area that needs to be picked up on, and it has been mentioned by other speakers, land. Land, I don't believe, is the critical factor on its own that might once have believed it was. I think what is critical is the provision of land with the relevant services, and is that land capable of bringing forward those services, and does it have the relevant permissions? So I think servicing of zoned land with that can bring forward affordable homes is key, and that needs to be looked at on all fronts. A number of elements that we have put forward equal to those other speakers in our own budget submission, and we have affordable purchase, the shared equity scheme, we would feel is a key area that needs to be addressed. It's quite obvious that the fact of the matter is there's a large cohort that are currently locked out of the market. Those that don't qualify for social housing, just under over 35,000, and anyone on a combined income of less than 94,000, just don't qualify as it currently stands to get on the market. And that's where they find difficulties with securing the deposit. And that can be up to 15 years in a number of cases, particularly in the urban centres. Or equally, they find it difficult under the current rules to qualify for a mortgage. And it would have to be said that we do have a structural failure at the moment where we've a large number of people paying well in excess of what they would on a mortgage repayment in the rents that they're paying in any given month. And if someone is paying that over a consistent period of time, you would feel that that has to be looked at, and there should be something there to allow them to be able to get onto the property market, to take the stress off the rental accommodation, to take the stress off what would be ultimately a long-term dependent on the state. Some of the key areas, I suppose, financing has been mentioned earlier on. Cost rental model, all would be supported as well by the private industry. And I suppose it's worth reiterating, I suppose our own members and those within the private industry are those delivering the models, delivering homes regardless of the model or tenure type. And it's only with, I suppose, collaboration and an early engagement and everyone using the expertise of each different party that you're going to see an increase in affordable delivery models. Finance is a key area in this, and I suppose, as mentioned, the cost rental model is a very supportive measure that we feel should be supported along with other key measures. The budget is coming next week on the 13th, and really that is going to set the scene for what we're going to see, I believe, over the next number of years. I think decisive, urgent and targeted action does have to be taken by this government. I believe the appetite is there to do that, and I think they recognise the problems there. And I would look forward to and I would welcome some of the positive initiatives that hopefully we'll see from that. So thank you, Sharon, and I welcome any questions, I think, when we get to the panel discussion.
Great. Thanks, James. I think a good ending to all the speakers to get the perspective of the construction industry really and the challenges there that are faced. I mean, some of the same ones that we're dealing with in the grouped housing body sector and no doubt in the local government sector as well. There's quite a few questions coming through. I think what we're going to do is field a couple of those questions to the speakers and invite those people with the questions maybe to speak to the camera just to quickly, I guess, ask their question, and then we'll go to the relevant panelists. Just to start off with here, I think there's a couple. I will start off with John, I think, as who was up first. Fiona Duncan has some questions. Fiona from Fluid, would you like to maybe speak to the camera, your video, and ask the question rather than me reading it? We'll see how that one goes.
Hi there, how are you? Thanks a million, John and Sorcha, for the presentations, much appreciated. So it was just a question just in relation to, I suppose, just to mention the AHB sector are very committed to affordable rental, and we have a significant pipeline of units ready to go. So we're very excited about, I suppose, the developments in the next few weeks. So just in relation to, I suppose, the affordability gap that might exist between cost rental and affordable rental, just around, I suppose, John's view on how that gap might be bridged. That's just my first question, John.
Thanks, Fiona. There's probably two important aspects which I mentioned. One is the funding, the finance, is to get long-term finance. When I say long-term, you need to be looking at 40-year finance at a low interest rate. So that's one very important way. The other way, I think, in terms of providing affordability early on, would be the state or local authorities providing secondary loans, similar to CAF, and that would be a measure that could very effectively reduce those initial rents. So I think it needs long-term finance, and it needs those secondary loans like CAF as well.
Thanks very much, John. There was just one add-on question, Sharon, if that's okay, just in relation to, I suppose, the social housing threshold. So it was interesting to hear Sorcha mention Vienna, and I suppose the fact that, and Austria in general, the fact that thresholds don't necessarily exist with regard to public housing. So just would welcome your views, John, on that in Ireland, and how you see, I suppose, for the moment, we probably would see, two separate tenures, social housing and affordable rental. But I suppose if over time you would see them kind of merging into the one, or just what your views would be on that, John. It would be great.
Yeah, I don't think it's a good thing to have a clear, barrier and limits, between social housing and affordable housing, or social housing and other forms of housing. And I'd like to see that, broken down. I think what's most important is we have, as you know, a differential rent system here, and we need to get a better differential rent framework, so that as people's income is higher, that they pay more rent, and meet the costs of delivering housing, providing housing where they can. So I think we do need to have less of definition between the two, but it's very important is getting our rent framework right, our differential rent framework right, and also working towards getting rents down, that we have a cost rental system that has got affordable rents.
Great. Thanks very much, John. Thanks.
You're welcome.
Thanks, John, and thanks, Fiona. It just is, there's a couple of names I'm going to call out because I think we're going to try and get people on the video and line a couple of people up. There's Paddy Coffey and Jude Byrne, and maybe Craig, if you could line those up. But just a supplementary one for you, John, which you mentioned access to low and no cost land and secondary loans for cost rental. It was a question, a sort of supplementary one that came from Vincent Keenan. He's asking how close are we to that? So what's the timing on us seeing those things flowing through quicker and a model developing for cost rental that's one that we can implement quickly?
Okay, one, just going back, in terms of the availability of finance and lower cost finance, that is available now. As you know, I mean, Sharon and others know quite well. In terms of specific measures, it's really up to the government and Minister Darragh O'Brien to finalise plans to support cost rental and announce those. So I couldn't really comment on that. It's really up to the government and minister to finalise that and announce how they want to do it.
Okay, I think somebody was hoping you'd have some inside knowledge there that you could squeal on. Grand. I think, thanks, John. I think we're going to hopefully go to either Paddy or Jude. Do we have somebody? Jude left the meeting. Okay, Paddy, possibly.
Paddy, you're on mute.
Okay, good morning, everybody. Can you hear me now? Yeah, good to see you all. A lot of familiar faces. I'm just listening closely, and I listened closely yesterday as well to the challenges that faces all, I suppose, as a society to continue delivery. And John, just a quick question, just to try and assist delivery of affordable homes, would it be your view that a grant scheme similar to CAF might be helpful, where either AHBs or local authorities could apply to that scheme and get more developments going?
The simple answer is yes, Paddy, is yes. In terms of having that kind of, call it a grant or really a secondary loan that does have to be repaid in the long term, is an effective way. We mentioned, the Vienna model, and in that case, the local authorities, the municipalities, in their case, they provide those secondary loans that are on favourable repayment terms in terms of when they have to be repaid, and as they're repaid, that funding is recycled and supports more delivery of cost rental housing. So it is a very effective way, and it's recyclable. Well, so it's not money that's just given away. It's money that's used and recycled, and I say it works very effectively in other countries.
Yeah, and I'm sure it could be targeted, obviously, then in the places of most need where affordability is the major issue.
Yes, definitely. I agree with you on that.
And just a couple of questions for James and the CIF, I suppose, and the challenges that we currently face. James, have the CIF done any assessments on the COVID-related issues and impacts on the costs of construction? Obviously, work plans, social distancing, and the reality on the work site is going to impact on delivery and cost. I'm just wondering, has any assessment been done on that? And the second one then that anecdotally that I pick up around the country is the cost of access to utilities. And the major one here, I think, is water and sewerage services. Now, I do know that government has addressed that to access service lands through the LIHAF funding, which I think is showing success in some of our cities. But I think, you know, the impact of the cost of connection to utilities on the cost of the build and the delivery of the housing units. If you could just elaborate on that some bit. Thank you.
Thanks, Paddy. Jesus, you've opened up big ones there now in those two questions. I suppose first off, in the COVID-related costs, we have tried to ascertain from our own members what is the cost of the new measures and protocols that we've put in place. That's just not possible yet at this point in time, because it does vary depending on the location, the type of build, right down to whether someone's building, whether with your traditional on-site or off-site, or whether with timber frame, at what stage they were actually at within the particular development when the new measures and protocols were put in place. Now, there has been a significant uptake. I suppose there was a standard operating procedure and practices put in place that has been adopted by over 20,000 companies throughout Ireland since its introduction in before May. We've seen over 200,000 people have completed the online induction. Just some of the measures that we've put in place to try and deal with COVID. As I say, I think the fruits of that have been seen when we've only seen 53 cases over the 6 months of those working in the industry. And I don't think, I suppose construction has always had a very health and safety led culture over the last number of years. I think that has helped the industry in this respect very much so. And I think for people taking it on, compliments to them, they've really embraced it. I think it's probably not a stretch to go and say you're probably actually safer on site in a lot of cases than what you might be in your everyday operations. But there is no direct cost, as we know of, just yet. Members have reported from our own survey that they've seen potentially an extra 4-week delivery time on average across residential. So from the time people are starting to pull footings till the snagging stage, on average, people are operating at a 16-week delivery time. Obviously, this doesn't take into account planning and other issues or challenges that can take a number of years. But they were running at a 16-week average. That has jumped to 20+ weeks now. So that will have a direct cost. It has costs on labour, wages, finance, programmes, a number of issues. We just don't know just yet what that direct cost would be. To answer your question on utilities, I think this is an area that will probably have one of the greatest impacts on delivery and output, and the cost of that and the impact on affordable homes in the next 24 months, I think without doubt. And it's an area we need to see in-depth focus on in that time frame as well. It needs to be addressed in the budget next week. It's quite clear, you mentioned water services, it's quite clear Irish Water don't have the necessary funding that they need, and that's a result of, I suppose they're trying to deal now with the impact of a lack of investment that we didn't see in the last crash, and all the more important reasons why we need to see investment this time round, albeit that it's counter-cyclical. We do need to see that investment. We're now seeing the impact of an underinvestment and a failing infrastructure and a deficit in that infrastructure in delivery. As you pointed out, there's a connection charge now in place for water and wastewater services that can be on average 5,500 units, or sorry, 5,500 euro per unit. There's a bond requirement of just over €1,000, and that goes on to the cost of every home. But I think on top of that, the policy also requires that an infrastructural upgrade charge would be on the homeowner, or sorry, on the home builder that comes into a particular area if there is that deficit existing. And that can lead to anything from 10 to 15 to 20,000 per unit, from what we've seen from our own members. And where we're looking at a stage now where I suppose delivery is marginally viable in the bulk of the country, those figures, you know, can just mean projects just won't be built. So we need to see investment. We need to see Irish Water funded. The policy itself, I feel, would need flexibility. There's another number of areas there where it does require 100% upfront payment. That doesn't tie in with the finance model available to most people at the moment. Finance normally will come through phases. If you need to secure water supply 100% at the outset, that can cause challenges. as I said, the offset mechanism needs to be in place there for the infrastructural upgrade. So you would have to implore government to significantly invest in infrastructure and water services next week, or we're going to not, we won't see an increase in delivery, and we just won't see the numbers delivered that we need to get to. Because remember, we were at 21,000 units last year. That was still 40% short of where we needed to be on an annual basis. And for every year that we miss that, we're having to widen, I suppose, the gap between household formation or population growth and output is just widening, and that's been exacerbated by COVID. But those issues were there before COVID, and unless we tackle those issues, they'll remain long after COVID.
Thanks, James. I think we're going to jump on just to another couple of questions. I'm just conscious of time. We have a question from John Hannigan. I think he's going to ask next, which I think is a question for John O'Connor, and then we're going to move to a question to Sorcha with Jose Ospina next after that, if that's okay. And so first to John Hannigan.
Morning, folks. Morning, John. Morning, everybody. Excellent start to the day. Well done. John, I suppose the question really to you is, we've seen that the funding side of it is now being discussed in respect of cost housing, cost and affordable rental. And we've also seen the issues around the support from government being exercised quite a bit. But what kind of level of management and maintenance costs are you anticipating for the management of cost rental? We've seen that the models for St. Michael's House and also Enniskerry Road, which is going really well in terms of its delivery, all needing significant state support. So I'm just wondering where you feel that that's going to pan out for other schemes in terms of management and maintenance.
Yeah, John, you raised kind of a very important issue in terms of, management and maintenance costs are a significant element of the rental costs that one will be charging on cost rental. And in some cases, those costs are higher than I'd like them to be, but they have to be provided for. In the Enniskerry Road, just as a matter of interest, there's an awful lot of focus on the cost of provision. But over time, actually, the maintenance cost accounts, managed maintenance sinking funds accounts for more than half the rental charge. So you're right, it needs to be recognised, and it is significant. It may be a few €100 a month, to cover those costs. But one thing I did kind of mention, in the likes of Vienna and in other countries, it is not pure that the social housing provider or the cost rental provider does all the management and maintenance the same way as you might do in social housing or market rental housing. The tenants, or the resident in this case, because of long-term owner, needs to be engaged more, and that more both work within actually the housing, but also even for common areas, and that's taken on by the residents on the basis that it'll reduce their rent. So there is a cost, it has to be provided for, but we also just need to look at how things are being managed in other countries. So that's a quick overview answer to you.
Yeah, no, and thanks for that, John. I appreciate that, and I agree with you. We can't manage them in the same way that we do social housing, because it is a different type of product, effectively. And I'm just wondering then, if it is a different type of product, which I would agree with, that the delivery of the nominations, etc., and the control of that element of it, is that likely to be different as well from what you think it should be?
Oh, I think so. Yeah, I think the rules around it and controls have to be, totally different. Actually, again, just going back to the, Vienna model, and I just tell you one thing that is done in Vienna, very specifically, on an ongoing basis, the local authority, the municipalities, they fund, one person, or I mean more per development, which someone who looks at community integration, and getting the residents to integrate and work together. So it's kind of, sometimes you need to take certain measures and put certain, ongoing funding in to make it work. in the Austrian case, they have a lot of immigration, so a lot of different nationalities in relation to being provided cost rental. But that's, again, another thing that you don't hear about, but very effective. The other thing I just mentioned, again, the Austrian one, you can actually buy your home if you want in Austria. Nobody does, but you actually can. You have the right to purchase, which is often not mentioned. So that's it. Maybe just moving on, I might moving over to Sorcha, and might ask Sorcha, is there any specific suggestion Sorcha would have in relation to cost rental housing?
Thanks, John.
Thanks.
Thanks, John. I think we're going to go to Sorcha anyway. So maybe Sorcha, you could respond to John's query. And you mentioned earlier some of the other models, whether it was Danish or Netherlands, or I can't remember exactly what you mentioned. So that would be useful. And I think we might cover that, but it'd be useful as well if we could get Jose Ospina maybe on video if he's available.
Sure.
Okay. I'm not sure if he's coming on. Okay, you go ahead, Sorcha, anyway.
Yeah.
If you want to
you can wait for
your
yeah. So first, I would very much be aligned with John's insistence that that you're not looking. Oh, sorry. You want to go ahead?
Sorry about that.
No worries.
It took a while for my my computer to connect. Yes, thanks. And congratulations on a fantastic conference. I've rarely attended because of cost and distance, but I'm attending this one because it's on Zoom. Just a question for Sorcha, and taking up to a certain extent John's final point there. There's a tremendous amount of work going on in Europe in terms of innovation. We now have the Green Deal program, for example, which is currently being developed. There's a brokerage event being held next week by Enterprise Ireland that's already attracted around 500 participants. And I just wonder if the housing association movement isn't not taking on board a great opportunity for innovation here. We tend to think of Europe in terms of just energy efficiency, maybe renewable energy, but there's a lot more to innovation in the European programs and in the support available, in the exchanges available. There's social innovation as well. There's innovation in terms of building materials and circular economy. And I just wonder if Sorcha, if you could give us some more, a steer on how far Europe is going towards making tools available for social sustainable housing, and how the Irish social housing movement could actually make use of that in terms of exploring innovative models and possibly other sources of funding that would contribute at least to the sustainability of the housing being produced.
Yes, so thanks a lot, Jose. Should I go ahead? Just to address a few points on cost rental. I mean, we have our housing observatory led by Alice Pettini here, who is constantly going into comparison of different systems. But what I would like to align a bit with John on stressing that this, I mean, you talk about different products, but I think you mentioned that you're not looking for a visible differentiation between products when it comes to the home itself. And I think this is what we see. If you mentioned Vienna a couple of times, it's about delivering quality homes. And we always also hear from our Finnish colleagues, when you walk into an estate, you cannot tell the difference between whether something is shared equity, social housing, cooperative housing, public housing, privately owned. So I think this is something that cannot be stressed enough, that you don't end up with suboptimal products because of the funding system behind it. I would also like to stress that a common feature is obviously limiting profit or cutting out profit. I don't know how far you are along that line, but the Austrian model has a very strict auditing system. All surplus made has to be pumped straight back into the production of new homes. And across Europe, we look at, as I say, the limited and non-for-profit systems. And obviously that, I mean, you have to work with the construction sector on that basis, and the demand has to be high enough in the limited profit sector so that the construction sector is in a way in the capacity just to choose the profit-making initiatives, so that and then you leave the non-profit sector without the contractors who are delivering. So obviously, yeah, that's two key features. You have to limit the profit, you have to regulate, you have to have a strict auditing system, and it's not, and you have to maintain a quality across the board. And then the other point on cost rental was indeed, I mean, in the end, you talked about the sharing the cost also with residents, also working together with residents. I mean, we see now that the Danish Building Fund was in a position to put €6 billion on the table for renovation, now as part of the recovery, and that is a surplus from their activities of construction and delivery of social housing. And they work in quite a well-established method where the funding is also coming from the tenants themselves. So we can really see that the affordability stretches not only to the people but also to the system in the long term. We also see a situation where cost rental and limited profit models are delivering profits back to municipalities and back to cities as well. So there's a few different, it can be complex to put the system in place, but if it's done properly, it can really pay back as well in the long term. But if you want to have more details about exactly how the Danish system, the Dutch system, I mean, the Dutch is also they have a 3-layer guarantee system. It's not, the funding is brought in primarily from the capital markets, a very limited amount of public funding, and the same applies for the Danish system. So obviously you have to look, as you said, John, to the very, very long term, but it's important to get the governance right, and examine the profit margins, which is always the tough one. And then I would just say to Jose, indeed, we have established the Housing Evolution Initiative, which tracks social, technical, environmental innovation throughout the sector. You can visit that housingevolution.eu. It's also open source, so we're encouraging projects to upload their own projects. But what we see is that the EU is very, very ambitious in turning the content into climate neutral. They're also very ambitious about their circular economy initiative. What we really work at European level is showing that technical innovation without looking at the social sustainability aspect will bring us nowhere. So all of the projects that we put forward from the sector in terms of innovation combine the two. So this is about, if we think about energy, it's about an energy transition that's going to turn places into places where people are proud to live. So it's about social innovation, different ways to involve people, to work together with people to transform their neighborhoods. But I have to say there is absolutely no shortage of funding which is on the table for pilots which are pushing the frontiers when it comes to innovation in the construction sector. Whether that's the use of artificial intelligence, the use of technology, a big focus also on the industrialization of renovation and new construction. Also on building energy management systems within buildings. So we're looking at renovation toolkits with an integrated, if you like, a brain which will integrate heat pumps with solar PV, but also provide a user-friendly interface for residents. Yes, there really are no limits for those organizations who are willing to really push the frontiers here. And as I say, our role is to make sure that this is also, these are affordable when it comes to the tenants, when it comes to the landlords and homeowners, because this is obviously the issue. You have, there's a lack of a business case, if you like, for for the climate transition in the built environment, because the upfront costs are still very significant. So we also have to look a lot at innovative financing. So looking at how, for example, revenue generated from emissions trading can be pumped into socially oriented renovation schemes, because there's no getting around the fact that the upfront finance is still lacking. But we have to look at innovation and innovation, technical, financial, and environmental innovation across the board. And I think we're really well placed to do that because we combine the three.
Okay, thanks, Sorcha. Sorry, I'm sort of trying to jump in there. Just I'm very conscious of time, and I can sort of see the numbers of participants are dropping. So either people are jumping off to other meetings or are desperate for a coffee at this stage. If we were at a conference,
yeah, I can imagine.
We'd all be congregating around the coffee pot at this time. Just as one final question before we close, from Brian Scally. Which I think James is going to answer, and I'm afraid we're going to have to finish there. If Brian and James could be as short as possible, and then I'll just give a brief announcement before we finish. So I'm not sure if we have Brian on video.
Hello?
Oh, here he comes. Very good.
Hi. I was just wondering whether any consideration had been given to the impact of the proposed shared equity scheme on house prices, given that it is a demand-focused measure, and I guess my concern is that it will likely feed through to higher land prices and ultimately higher house prices.
Thanks, Brian. I think we've got James who's going to.
Yep. Thanks, Sharon. Thanks, Brian. I think it's a great question, to be honest, Brian. I think you've covered off the main concerns there that everyone has. I suppose we have looked at that, I suppose, as part of our own proposal. I suppose the fact of the matter is we have a number of our society that are currently struggling to try and secure a deposit, and thankfully they're helped through the Help to Buy on that front, and we would hope that would be extended, that might cover. Equally, we have a large cohort that are just unable to secure a mortgage as it currently stands. Now, the shared equity scheme would hope to tackle an element of that. It would be important that scheme is a loan. It wouldn't be grant-based, that it would be a loan repaid over the lifetime of the property. Equally, you would like to see that the equity would be split dependent on the percentage of the equity that one might take, dependent on the home type, whether it might be an apartment, might require a higher equity stake from the state, given the viability and the cost of delivering apartments, as opposed to maybe a lesser equity, maybe up to 25% in the case of a traditional home, your 3-bed semi. There would need to be a cap on both income levels and household prices. And I think that cap should be reflective of prices in the greater Dublin area, in the urban areas and nationally. And that would hopefully prevent any unnecessary inflation. I think on the land element, as we mentioned earlier on, land it probably isn't a critical factor on its own that it once was. It does make up an important part of the cost of delivery. I think equally, when we talk about the services and the provision of services, and such as those as water to land, they are probably equally some of the measures that need to be wareful of. So I think land on its own probably isn't the critical factor. We need to be conscious of service and land, and if we can open up a mechanism where greater services and infrastructure can be provided to land, that would prevent land, I suppose, trying to capture a premium where it wouldn't necessarily, or where it shouldn't necessarily to create any premium. So by virtue of a greater services and to those lands, you shouldn't have that land price. You rightly say, I suppose equally on that, we need to look at some of the other costs of deliveries like VAT, levies, contributions. Contributions is a huge area. That can be 4 to 6, 7% of the cost of delivery, and they're needed, and it goes into private delivery. They do need to be accounted for. You're right, it is a demand-focused measure, but I think equally we need to state, we've seen, and over the last 10 years, we've seen a huge array of supply-led measures. Have they provided the solutions that we hope they would? You'd have to say not to the level we need. So I think it is time that we need to try and look at some of potential the demand side measures. Land, a shared equity, Help to Buy. This is a very complex area. No one alteration, no one scheme, no one policy, nor no one single critical factor is going to change it. We need to see an array of different measures tackling all the different issues. There's no silver bullet to this. So we need to see all possibilities and all areas looked at, from planning, guidelines, densities, cost of delivery, finance, anything that can be done to support social delivery in the budget. All key areas, I think, equally that need to be addressed.
Thank you.
Thanks, James, and thanks, Brian. I'd just like to draw the session to a close. I know people end up with Zoom fatigue at these sorts of things. People need a bit of air and a bit of rest for their eyes. So just to close the session, to thank our speakers, John O'Connor, Sorcha Edwards, James Benson, and for all the participants, really, particularly those who've come on video and asked questions, and I guess got us all discussing and thinking about some of the topics. Just to let you know, the conference will start back at 2 p.m. with the parallel sessions, and one of those, as you know, is focused on financial models for the delivery of affordability, so might follow hopefully well from the session this morning. You'll have received a link this morning in your email at about 11 o'clock. That's the link you need to use to go to the parallel sessions this afternoon. The one you used for this session won't work. So just to make sure that you use the right one. And if you haven't registered for a session for this afternoon and you want to now, if you email Catherine at ICSH .ie, and she should be able to help you with a link for this afternoon. So thanks again to everybody, and thanks to the ICSH staff who've made this as painless as possible for us all. Thank you.
Welcome to Unfria, Irish Wheelchair Association Independent Living Houses, based here in the Barony of Erris, County Mayo. Back in 2001, the need was identified here for independent living houses for young people with disabilities living in rural areas in Erris. So after quite a bit of lobbying, the Irish Wheelchair Association managed to secure funding to build these houses in cooperation with the Mayo County Council.
It means the world to me. I mean, like, it's first off, it's like independence. It's like come in here and, you know, do whatever, do my own small bit of cooking, do a small bit of washing, you know, and it's just an unreal feeling, you know, besides relying on mum and dad and all this carry on, you know, so yeah, onwards and upwards.
Well, I've lived here in these houses now about 2 years, coming up next month, and the changes it has made to my life is immeasurable, to be honest. The house is fully wheelchair accessible, and I can do normal everyday things. It's like at the press of a button, I can, for example, I can open a window, I can open a door, I can press of a button, I can open the wardrobe, and the level of the wardrobe, the clothes come down to me, to my level, which is great.
These houses enable the users to live just like everybody else in their own home. This is a flagship project, and it's worked out so very well. It's given IWA probably a whole new view on how they can plan into the future for independent living houses and accessibility in the community.
Yes, it is. Oh, definitely. My heart is definitely in this home. Yeah.